Good afternoon, everyone, and welcome to Stock Market Today for Monday, January 6th. I'm Alissa Coram, and today we're going to be taking a look at the major indexes, which the NASDAQ and S&P up but off highs. And here to break it all down is my colleague, Justin Nielsen. Justin, as always, great to see you.
Great to see you as well, Allie. I feel like, between some of our meetings today, it's been an Allie day for me.
I know we've hung out a lot
Yeah,
today, so
so
not sick,
not a
not
bad
sick
thing. Not a
of
bad thing.
each other yet, right? You're not sick of me yet because you're gonna
Right.
see me more on Wednesday
Yeah, exactly.
for the
Yeah, and
podcast.
for those that don't know, Allie will be the guest on the Investing with IBD podcast on Wednesday. So we'll be going live at 2 p.m. Pacific and 5 p.m. Eastern. So looking forward to that. I mean, it was a great talk that we had this morning, and I'm really looking forward to the conversation. So
Okay. Hopefully people will enjoy it. I'm looking forward to it as well, Justin. And we've got 3 stocks we're going to look at. What are they,
yeah.
Justin?
Shopify, which was also stock of the day in IBD today. Also, just to get a little bit outside of tech, we're going to take a look at Intuitive Surgical. I do have a position in both Shopify and ISRG. And then I think you made some really good points on the IBD live show this morning for Ralph Lauren. You, of course, had a great, Abercrombie and Fitch trade last year.
I think I know retail.
Yeah, exactly. I trust you, Allie. So
Yeah.
we'll dive into that a little bit and discuss, sometimes you got a great looking stock, but do you buy it?
Yeah, exactly. So we will talk about that. But first, let's analyze those major indexes, and we'll kick things off with a look at the NASDAQ composite, finishing today up about 1.2%, was up almost 1.8% or so, I believe, intraday, closing in on that 20,000 mark, but backing away a bit. Meanwhile, the S&P 500 also closing off highs, finishing with a gain of less than 0.6%. You can see that rejection at 6,000 there. And then the Dow was lower today by the close, reversing lower, down about 0.1%, and then down 0.2% by the close. Another reversal here. The damage Russell 2000. So the NASDAQ, we've seen it showing that relative strength lately, and it looks like that continued today.
Yeah, certainly. And as you mentioned, it was up almost 2%. So, early in the day, it was like, oh, here we go. Things are looking great. And look, 1.24 is nothing to sneeze at. That's a solid gain. So I'm not knocking it for that. But you do have to be aware when things close off their lows. And this is a difference also between the closing range for the day and also the true range, because when you consider that gap and how far it kind of came from the close on Friday, it was actually in the upper part of its true range. So for the NASDAQ composite, it was a close at 64% in the true range, as opposed to 37% in the closing range. So I think this is one of those cases where using the true range for a gap really makes a difference, because it makes it look a little bit stronger than it would otherwise. But another thing that's very notable is guess who's back in play? 20,000. So we got a little bit of a touch above there at, I think, 20,007 was the peak, and it got immediately turned away at that level. So that does make this an area of interest, something to watch, and we'll see if we can get above that. I also do like, this is something that we talked about on Friday for the SMT, the 21-day moving average line. The next hurdle it had to face was not just closing above it, but getting the low above it. And we did that in spades today. A lot of room because of that gap up. So very positive action there.
Like it.
Yeah, so I think that's a good thing to look at. S&P 500, by contrast, again, it got above that 21-day moving average line, but it was a little bit more lackluster. Like, let's kick it dragging and screaming. A little bit more of an ugly look here, because the gain was a lot more slight. So, but still, 0.5% is not bad, right? So, and the other thing too with the S&P 500 is, even if you do give it the consideration of the true range, still in the lower half.
All right. Well, we know the areas that we're looking for. We've got this trend line. We've got that round number at 6,000. So if we are going to see this rally continue, those are the levels that we are closely watching there. Also influencing today's action, that 10-year yield. So I think earlier on in the session, we were quite impressed with
Mhm.
the strength, given the fact that the 10-year keeps on climbing. So perhaps a little bit of that weakness can be attributed to that.
Yeah, I mean, look, we always, everyone knows about the correlation of, okay, when the 10-year treasury yield is going up, what that does for stocks, especially for small caps, getting pressure. And it was kind of turning into a joke, like what correlations, and it just goes to show you that sometimes you have to really kind of pay attention to what the market is doing,
Mhm.
because it can go a lot further sometimes, beyond those correlations. Correlations are just that, they're correlated but not exact.
Yeah.
So you have to be aware of when things differ and are doing
Mhm.
something differently. But as Ed Carson has mentioned a number of times, some of these things don't seem to matter until they do. So just something to keep in the back of your mind in terms
Exactly.
of a headwind that we could be facing with this huge move that we've seen in the 10-year treasury yield. But again, it's not really of an issue until that starts affecting your portfolio. That's
Yeah.
when it becomes a lot bigger of an issue.
Right, exactly. I think it's one of those things where, you need to be aware of the macro backdrop. And a lot of us as trend traders, momentum traders, for focusing on growth stocks, that's not something that's driving our decisions. But I think it's still good to have an awareness of what is that macro backdrop. Absolutely.
Yeah, and certainly don't let the macro necessarily stop you from, paying attention to the chart of your individual stocks, because
Mhm.
you can have a macro picture that says, "Oh no, things should be much better." And if your stock isn't doing well, I don't care what the valuation is. I don't care about any of that. At the end of the day, you're making money on what that stock price does, and
Yep.
so, yeah,
Totally
price
agree.
pays, right?
Yeah. I'm with you there, Justin. Okay, next we want to take a look at IBIT, which represents Bitcoin. I do own this ETF. It had a really solid day today, up almost 4%, with Bitcoin itself crossing that notable round number of 100,000 once again.
Yeah, so that was a big, we've talked about a lot of round numbers already. 20,000 for the Nasdaq, 6,000 for
6,000.
the S&P 500, and 100,000 for Bitcoin. Look, this is something that was closing at the peak, at the top of its range. So you have a lot of things where, the 10-year treasury yield, all of those things. And here you have IBET closing at the top of its range, a lot of strength. Look, this didn't even come down to its 50-day moving average line. As ugly as you might
Mhm.
have been feeling like that, that pullback was, and I unfortunately got shaken out. I'm not nearly as strong in my intestinal fortitude as Allie. So I got shaken out, and now I'm like kind of looking at it from the sidelines, because I meant to get back in, but I was on
Mhm.
vacation. I think I was at Universal Studios, and yeah, what are you gonna do?
Well, you had a lot of big winners in November, December, Justin. So let me have this one, okay?
Yes, I will. You had plenty of big winners too, so
Yeah.
I'm not feeling too bad for you.
We had an okay 2024. We'll share
Yeah,
more
yeah,
on Wednesday. Okay, so we also want to take a look at FNGS. This represents mega cap tech, those FANG plus stocks, up 2.1% today. So definitely outperforming as we continue to see not only AI but the mega caps in
yeah.
focus here, Justin.
Yeah, and I mean, this looks great. Support at the 21-day moving average line. I do have a position in the leveraged version of this, FNGG. Yeah, this is looking strong, and
Mhm.
and again, showing you where the strength is, because let's by contrast look at our SP, which
Yeah.
is the S&P 500 equal weight. That was down today. It still has a lot of work to do in order to kind of get back to recovery mode. The relative strength line looks poor. It's below a downtrending 21-day moving average line, and it's been below that 21-day moving average line. It's living below that. It's living below its 50-day moving average line.
Mhm.
So FNGS, the index, is showing a very different picture here.
Yeah.
Important to kind of keep that in mind, because if you're finding yourself struggling in your portfolio, just know, hey, the average stock, this is what it's doing. It's
Mhm.
struggling too. So either you have to sit out if your stocks aren't working, or get into the stocks that are working
Yes.
somehow.
Exactly. And I think the silver lining about the back half of December and the first couple of days of January, providing that consolidation and potential buying opportunities, whether it was Thursday and Friday, which we talked about on IBD Live, and even today, maybe, some of the buys today, didn't close exactly how we wanted them to. But again, we'll have to see where things go from here. And I think speaking of this RSP, this was probably one of the biggest head fakes in
Yeah.
November for traders. We saw a glimmer of
Hmm.
that breadth broadening in a notable way, just for it to really fall
Hmm.
apart in a significant way. But this just goes to show exactly what you said, Justin, where we should be focusing. And it doesn't mean, okay, only trade FNGS or FNGG or the Magnificent Seven, but screen for stocks with that relative strength, right? And I
Yeah.
feel like there are others out there.
Absolutely. And, go ahead and pull up the Russell 2000 too, just because it had that same head fake. You make
Yeah.
such a great point there, Allie. Look, I got faked out. I was buying this. I was like, okay, here we go. Finally, the Russell 2000 is going to participate because they've been saying the entire year, it's just a
Yeah.
matter of time before the Russell 2000 starts participating again. And look, I was wrong, but
Mhm.
I didn't stay wrong.
Yeah.
So that's an important thing. As you see that relative strength turn and start crossing below those moving average lines and really start looking
Mhm.
funny. Okay, well, are you gonna fight the market and say, well, uh you know
Right.
everyone was saying that it's its turn. It's,
Mhm.
well, apparently not
Yeah.
yet, at least.
Exactly. And this is to me where you can connect those dots with the macro, right?
Yeah.
What
Mhm.
is sensitive to interest rates? Small
Right.
caps. So
Absolutely. And we're definitely seeing that.
yeah. All right. Let's talk about a couple of stocks now, starting off with a Shopify up 2.5% today. This was our stock of the day, Justin, and some compelling chart action here.
Yeah, so I highly recommend that people do take a look at that stock market today. You can get it, if you go to
Stock of the day. Yeah.
investors.com, you will, see it on the homepage as soon as it's written. Give us a moment, because usually we make that decision in the morning. It gets assigned, someone's got to write it, but you'll find that in Market Surge. You'll find it on the homepage of investors.com, and it's a good combination of both fundamental and technical analysis. So a great thing to look at there. Shopify, the chart here is looking pretty good. And remember, you got to put this in perspective. Looking at the weekly chart, how much devastation Shopify went through. Actually the monthly chart maybe, because this was one of those big high flyers that seemed like it was potentially done for good. But
Mhm.
it's coming back. It's making a strong comeback. There's a lot of stuff going on with Shopify, and again, this is something that you can learn more about from Reinhard Kraus in the article. A big move off of its last earnings report, and one of my favorite things is when stocks can hold on to that move and let that 10-week moving average line catch up to it. That's exactly what's happened with Shopify. It did have that ugly week, but then it just stopped. It just stopped going down. And that's a sign of strength too. When a stock takes a hit like that and then just refuses to go down anymore, gets that support at the 10-week moving average line, and now seems to be on the recovery side. Again, I do have a
Mhm.
position in this. I thought it looked pretty good today, but the thing you do have to be careful of is, look, for some of these stocks, they started moving on Thursday. They really got going on Friday, and then they were really, strong, continuing that Friday move this morning. It might be time for some of these to take at least a little pause on the short term. So be very careful not to chase.
Mhm. Yeah. And I think the closing range here, closing right at the top of the range today, while the
Yeah.
index is faded a bit, that also notable. I'm not in this one, although I am a big believer in the story of Shopify. As I like to say, I'm the chief procurement officer of my household. So I love the Shop app because
Yeah.
no matter, if I'm buying something on Amazon or through a merchant, that individual merchant, that's UPS or FedEx or whatever it is, I can track all of my shipments all in one place. and know when my deliveries are coming. And if you do check out with Shop, there's a little incentive there. There's Shop Cash that a lot of merchants offer. And so then you can use that towards a future purchase. So just a little perk there
Yeah.
to check out with Shop. And I think it just makes it so easy to track all of your orders. So I'm a fan.
Yeah. So for those that haven't read Peter Lynch's One Up on Wall Street, it's that idea when you can kind of understand a little bit of the story, understand some of the things that they're providing for their customers. Those things make a difference, right? We saw that in 2020 with COVID. Those companies that were leaning into what can we do to help customers through this and be more productive, and and keep themselves safe. All of those things were such big things. And look, that stuff is happening all of the time. What are they doing for customers? And yeah, that's why I love listening to Allie, because she she has her finger on the pulse of a lot of these things too.
Well, don't ask me about quantum computing because my depth of knowledge is not quite at the same level just yet. Maybe one
Well,
day
and
soon.
look, with some of those things that are so speculative, does anybody really know?
Yeah.
I mean, when you're talking about 10 years out for some of this technology, a lot can change. But when you're looking at the technology that's actually in place now, it's a very different thing. That's a
Yeah.
lot more tangible. And you see that in all the numbers, the earnings, the sales, with quantum
Right.
computing. Show me the revenue,
Yeah.
show me that. And it's a lot more difficult. You're buying a story there, as
Yeah.
opposed to something where you're understanding the story. Very different.
Exactly. Exactly. All right. Well, let's move on and talk about Intuitive Surgical. This is ISRG up 1.3% today. And Justin, I feel like over the last couple of weeks, especially, but really the back half of last year, this is one that continually comes up on the screens. It's a very steady outperformer and offering a new potential buying opportunity today and even Friday for those who maybe wanted to
Mhm.
sneak in, but definitely today as it crosses some moving averages and a trend line.
Yeah, so you have both the trend line, or if you had just kind of taken a flat line, and kind of said, okay, well, right around 540, there was an area where even if you go that a little bit more to the left, you can kind of see that there was just a lot of congestion in that area. So getting through that is important. But this is also an element of portfolio construction. There's a lot of heat that's moving. There's a lot of stuff that is on the high average true range side, a lot more volatile. But then you've
Mhm.
got something like ISRG, which, look, the relative strength is in an overall uptrend. It's just not vertical like a lot
Mhm.
of these stocks that we've seen, like the quantum computers and stuff. So this has been a lot more steady Eddie. It goes up a bit, comes back, lets that 10-week moving average line catch up to it. So maybe a little bit easier to handle, as opposed to some of those high flyers that come down just as quickly as they go up. This kind of is a little bit more moderate on both sides.
Yeah. Okay, so potential buying opportunity here for a steady Eddie type name where you can easily know where you're wrong, right? Low
Yeah.
risk entry
Yeah.
instead of waiting for the breakout because it's a stock that likes to pull back to that 10-week. So
Right.
seems like one
And
to be
that's a big
avoided.
thing, right? If you're looking at entering stocks, you should also be looking at where you're going to exit.
Mhm.
And this one offered that. And again, if I didn't mention it already, I do have a position in Intuitive Surgical.
Okay. And I like that tilt higher in the EPS line there as well. Okay, let's round things out with a look at Ralph Lauren. Definitely checks a lot of boxes from a technical perspective, really showing that market outperformance in the back half of the year, especially after mid August, and even has an RS line blue dot right now, starting off the week strong with a gain of 3.6% after going nice and tight over the last 6 weeks or so here, Justin.
Hmm.
So I think the fundamentals are the sticking point for me here, but the technicals definitely quite strong.
Yeah, I mean, if you take a whack to the stock price, what I'm going to want to see is a little bit of tightness or some positives to overcome that. And you have two. Number one, you snapped right back. Number two, you got real tight. Number three, it wasn't actually that bad. That was only a 15%, drop and support the 50-day moving average line. So a lot of things, as you said, going for this technically, the blue dot, the relative strength, there is, and look, even the earnings, not
Mhm.
bad. 20% is nothing to sneeze at. That's pretty good. So it's not bad, but the sales a little lackluster. Look, with retail, you have to know that a lot of times you will get, some single digit sales and it can still be okay. But it's okay to pass on stuff. If you're like, okay, this isn't quite up to snuff in terms of my standards, it can be a great looking chart and maybe you still pass. Now, again, Allie, you were sharing a story of how you're
Mhm.
using this, how you're using
Yeah.
this for gift cards and buying gifts
Gifts.
for friends.
Yeah.
So look, you can still, maybe you don't go all in on this, or maybe you don't go with
Mhm.
a full position. But this was another one that, look, we were talking about it earlier today on IBD Live, and this is one that closed at the top of its range, so it should get extra points for that, whereas a lot of things closed well off their highs. Those are stocks that are worth considering. And so even if you don't, take the plunge now because those sales bother you, it's still worth kind of keeping an eye on this because it is showing leadership qualities.
Absolutely. And so this is another company that I am very familiar with. I have the app. I placed an order for a Christmas gift most recently. I love the if you have an account with them, you get access to free shipping and gift wrapping, which is just, who doesn't want a little navy blue box with a red bow, right? Just so classic and classy. Ralph Lauren, great brand. But with that being said, again, the sticking point here for me is that single digit sales growth. That's why I decided to pass. But each trader needs to decide for themselves, what their style is. Are you looking for trades that are 20 percenters, like Chris
Yeah.
Gessel says, buying things primarily on the technicals, but not something that you have super high conviction in? Well, something that I'm trying to do right now is to really focus on the stocks that I can have that kind of conviction in, because that plays well into my style. So even though you would think, hey, she's so familiar with the story, she's got to have that kind of conviction. Well, data also plays into my conviction
Yeah.
level.
You have standards and it's just not quite meeting your standards. So I think it's fine to have standards and high ones at that.
Yeah.
It's also a reminder that we talk a lot about charts on the show,
Mhm.
but fundamentals matter as well.
They
And
do.
we ideally want to have both.
Yeah.
And Bill O'Neill, the founder of Investors Business Daily, as much as he focused on charts so much, he actually, try to remind people all the time, 75 to 80% of his decision making was based on the fundamentals.
Yeah. And just because you brought it up, and maybe not everyone knows, but the Abercrombie
Mhm.
part of this. So here's sort of the contrast to me in terms of retail leadership. Look at the bottom line growth here for Abercrombie. I caught a really nice piece of this one last year, but it's a different stock. And look, you can see that growth has slowed down. And so even though this didn't have a triple digit top line growth to accompany the triple digit bottom line growth, it still had really
Yeah.
healthy double digit top line growth that was accelerating. So that got the stamp of approval from me. And I was just very impressed with the outperformance, relative strength, and the fundamentals here and the story.
And
Uh,
you were shopping there. You were
yeah,
shopping there. You were like,
they're out of
you're
stuff in my size, so flying off the digital shelves. So,
yeah. No, and look, this is one where I participated as well, thanks to, some of the information that you were providing. I just didn't get as much as you did. I had a fraction of that. So,
yeah,
which
exactly.
is still
That's
okay. I was happy with the trade, but then I was
right.
like, wish I was Allie.
Yeah, I mean, and that's where the
Yeah.
conviction helps, right? Because I
Yeah.
think Chris even texted me like, "Hey, it's crossing an upper channel
Hmm.
line. Maybe you should sell." I squeezed a bit more juice
Yeah.
out of this one just because of my conviction. So that's what I'm really trying to do with my trades this year.
I know we've already gone long, but It's also worth just mentioning SMH, because we do
Yes,
have, as a
please.
reminder,
Mhm.
NVIDIA, which both Ali and I have positions in. You've got, CES going on. Taiwan Semiconductor that we mentioned on Friday had a great day today. A
Really
big
great
move
day.
there. We were talking about how, yes, earnings and sales and all that are coming up, but
Mhm.
it was actionable on Friday. It was
Yeah,
actionable on Thursday, actually.
right.
Yeah, big move there, and SMH looking a lot stronger. Part of that helped by NVIDIA and Taiwan Semiconductor, which are two large positions in the SMH.
Yeah. All right. Well, it's a sector to watch right now. We'll have to see how the rest of this week shakes out. Well, Justin, thank you so much. Great discussion today, as always, and looking forward to chatting with you more on Wednesday.
I'm looking forward to it as well.
All right. Thanks again to Justin, and thanks to everyone for tuning in. That is it from us for today, but we will be back with more tomorrow morning on IBD Live, where David Ryan is making his return after a December off. So make sure to tune in 10 minutes before the opening bell, investors.com/IBD Live for all those details. We will see you there, and then we'll also see you right back here tomorrow after the close.